Explain dollar cost averaging. I have a video that
For
does that really well.
context, I'm 33 and been in this industry for 9 years. Owning my own business
Oh,
minus expenses put me around 280k a year.
nice.
All jobs are susceptible to some ups and downs, but
Sure.
that's when chat needs to listen to Wood TS investing / diversifying / retirement advice.
That's nice. Dude man's 33, so that makes more sense. And he's been in the industry for 9 years. He seemed a little wise for, I had pegged him, what, 6 years younger than that? So, but yeah, Ramon, congrats. I'm glad that you're doing well. Do you think the get rich slowly will still work after today's market? Guys, I have a video about that very topic. It's funny. One guy asked, this video is 3 minutes and 40 seconds long, and it's me. I hope I don't cringe while watching it. But one guy said, do you think it'll still work? And another guy said something similar. I don't know. Let's watch. Give me 60 seconds, and we'll get to my point. It's going to be worth your time, I promise. I have a very slow-running series about getting rich slow, how to be a millionaire in 22 years. And I'm going to link the first video in the description. It's worth your time. It's 16 minutes, but you're at home. You're quarantined anyway. Watch it. Seriously, watch it. I'll give you a minute. It talks about dollar cost averaging. Click on it now. You'll come back a wiser person if you're not a finance guy. No, really. I'll wait. You watch it and then come back here. Seriously, watch it. Okay. You might be wondering, what about now, right? Because we've had this stock market crash, this thing. We've seen a couple of these before. We've seen them in 1987. We've seen them in 2001, 2008. And here we are in 2020 with our latest recession, stock market crash, etc. So how does dollar cost averaging work out? If you follow the get rich slow plan, what happens? I have the answer. Here's the scoop. Let's say that you're investing and you're doing it slowly, right? So we have 4 time periods. It doesn't really matter. Each time you put in $1,000 or whatever. The share price is 10, 15, 20.
Sorry,
this
chat.
is a nice
I wanna make this
gradual
the right
rise,
size.
right? You can imagine that on a stock chart. It kind of rises, flattens, rises. This is one way that the stock market could look. This is how it's looked for the last 12 years or so, just steady up. And it feels good, but it's not actually the greatest. You will do better dollar cost averaging if the stock market follows a rocky road. So I'm just going to talk about this real quick. You got $1,000. This is the share price. Sometimes it's 10, 15, 20, kind of slowly increments. And this is the number of shares purchased, and this is our total. You get this. You understand that. The object is to have as many shares as you can, right? The end game is going to be what it's going to be. But what happens if the road there is smooth? What happens if it's bumpy? So here's a smooth one, 10, 15, 15, 20. That's nice. Let's say that we hit a dip like this, and it goes to 5, and then it goes back to 15 and 20. Well, you can see we have a lot more shares. We're going to be way wealthier than if we made it at 10, 15. You're thinking that's obvious. No kidding, Captain Obvious. Let's do it both ways. Let's take the share price and put a huge drop in it. We'll go down by 10, and then we'll go up by 10, 390. Right? Do you remember what it was before? 283? If we hit a rocky road, donation, we have big lows.
It's for a logistics position at an office, and I am a bit worried because at the first interview the last person at the desk ended up leaving after 1 year because it was such a busy desk. Still a bit iffy since him leaving might be a sign. The pay is 100K.
We'll circle back to you. You're not forgotten, bro. Dollar cost averaging naturally purchases more when the share price is low and less when the share price is high. Did you get that? I want to say it again. Dollar cost averaging naturally purchases more when the share price is low and less when the share price is high. If you take the rocky road that the market is on right now, then you do better. The market has bounced back from this before. 87, 2001, 2008, and here we are again. I can't predict the market. People who time it, people like that's not how I make money. There are people who do. Congratulations to them. But me, dollar cost averaging, get rich slow. This, what we're seeing right now, if you're looking at your total value of your portfolio and getting bummed out about it, I think you're making a mistake. The right idea is to stay the course and be grateful that the buying opportunity came along, because the rocky road pays off better. Okay, so I made this video on March 18th. Let's look at, like, how is year to date unavailable for the S&P 500? What is happening? How are S&P 500 charts unavailable? It's silly. Can you go to, like, finance.yahoo? Let's see what this does. All right. So I made that video on March 18th. Things were looking rough, chat. I don't know if you can see this very well. And I was like, hey, this might look rough, but the bumpy road is better. Your dollar cost averaging will naturally buy more when it's low and less when it's high. Now, I don't know what's in front of us. We may have more rough days that come. But if you sat here and invested, as this thing dropped and then again as it went up, you'd do pretty well. This is nice for you. If you had what feels like a nice, smooth 5% increase as it went from there to there, or whatever that increase is, then it might feel better than the volatility does because you had this low spot. But dollar cost averaging makes you smarter in that you naturally buy more shares when it's cheap and fewer when it's expensive. So I hope that had some sort of value for you.
Chat, seriously, you need to be doing dollar cost averaging. There is no get-rich-quick scheme. There are some, but they usually have a bigger get flat broke or go to jail aspect of it. The way our economy is structured favors assets held as a way of gaining capital, not wages earned.
Oh my gosh, he's so right. I feel like that's immoral almost, the way our tax structure works and such, but you live in the world that you live in, not the one you wish you lived in, and money earns money. It's the best way to gain it. This guy Ramon's on target, guys. He's got things figured out.
I'm a licensed broker and principal for a large online firm, and chat, listen to what he is wise. The people who lose money in the accounts I see are the day traders, and the people who I see who have made the most money buy and hold.
There you have it. Thank you for the sub, guys. I appreciate that.